Prediction markets are something that I think will inevitably be a major category in crypto that pushes the space forward. A prediction market, for people that don't know, is basically a speculation market for any outcome. So you could have, will the Red Sox beat the Yankees? That's a prediction market that a lot of people are familiar with.
All right, Nick, thank you so much for taking the time and having this conversation with me. I think the audience will learn a lot about crypto, NFTs, and whatnot. You've been in the industry for some time, and we have seen the rise and a little bit, of hype, and then the hype goes away of initially Bitcoin, and then, altcoins, and that may include Ethereum and other ones, and NFTs. And there's this question that many people ask, are NFTs dead? Do you think NFTs are dead? And what's the future of NFTs from like 3 years and 5 years down the road?
No, I mean, I don't think they're dead at all. I think NFTs fundamentally are a new business model for online creators. Anyone who's putting out creativity on the internet, the NFTs are a business model. And I think that's what continues to excite me about them long term. If you look at the current dominant business model on the internet, still it's advertising, right? And we all know the problems now when advertising is the business model. And even this week we're seeing kind of what is happening with X and some of the large corporations that want to censor what's on X, right? And NFTs, I think it's still early in people realizing that NFTs are a viable business model for creators. But I think if you zoom out in 5 years, not just NFTs, there's kind of other unique business models that crypto enables. But I think new business models for online creators is kind of what continues to excite me long term about crypto broadly and NFTs specifically. And even if you look at all the activity a couple of years ago, and you look at OpenSea volume now being way down, there's still collections in the NFT space that have a floor of say 100K. There's still real belief from albeit a much smaller community than there was, but that is the nature of crypto, right? The kind of booms and busts are crazy because anyone in the world can participate. It's truly global, and because the internet's more connected than ever before, so kind of memes spread like wildfire. So my conviction on NFTs, I don't think there's any fund in the world that's kind of done more in NFTs. I mean, I think we have the largest institutional fund investing directly in NFTs, and we've also invested in a lot of businesses. So I'm clearly biased, but my long-term view hasn't changed at all, despite the kind of the boom and recent bust.
Interesting. So I think you talked a little bit about enabling creators on the internet, but also there is there are different aspects inside NFTs, right? Like there are art that's created, so like CryptoPunks, but also for example, people creating music. So when I think about that, I think about Royal, Sound XYZ. So like, do you think that, so basically from what I understand, what you're saying is that maybe we're going to transition from advertising as a big part of enabling, for example, businesses like X or even creators to more direct money. Yep. Is that the case? Like, I've seen, for example, streaming 8 as a market share, what people used to buy CDs. Is that the transition back to like buying, instead of physical goods, digital goods? And does that mean that advertising will go down as in market, or is just the percentage is going to be much smaller?
I think, I think advertising is not going away anytime soon, right? But I think direct to audience models are going to continue to increase. And again, it's because advertisers tend to want to censor what is said. And I think both what consumers want and what creators want is, authentic communication that's not, censored or adjusted based on, what an existing power structure wants. So there's no doubt in my mind that kind of the direct to, consumer share is just going to increase a lot. And it's not just NFTs, right? Obviously, things like Patreon that allow creators to get money directly from their audience, or Substack. There's a whole bunch of interesting models. But the unique thing about NFTs is that while it's a business model on one hand, it's also a kind of a new asset class that the audience can participate in upside as well. So that's what NFTs have that's unique that something like Patreon or Substack doesn't. And that, of course, requires people to believe that these things are valuable, right? And I think that's what still hasn't clicked for some people. It's like, people believe that stocks are valuable because there's cash flows attached to them. But a lot of people still don't, believe the story for why NFTs are valuable, but I think they will. I mean, they already did for a bit when everyone did, and now that belief has kind of gone the other way. But I think the long term trend, my view is humans are mimetic and believe what other people believe, and sometimes it takes a long time for them to believe that that a certain thing is valuable. But it's the story, and if people still believe that CryptoPunks are quite valuable, right? And they're likely not going to believe that every single creation that a creator mints and sells as a scarce, authentic digital object is going to be valuable. But I think there's a lot of these stories that will persist and grow over time, and that the asset class side of things, of NFTs, the belief is going to continue to grow. And again, this idea of like the consumers being able to kind of participate in the upside of the growth of a creator is the piece that I think is really interesting about NFTs as a kind of direct to consumer business model.
Interesting. So let's dive into a little bit into the art aspect. So you mentioned you're one or the largest investor into NFTs, one of them or the biggest. I think you hold Punk 4156, if I'm not mistaken. Are there any trends in the art space that you're seeing, and what's the bull case for NFTs? So I've seen stats that I think 1 million people have bought NFTs when the money, like when there was all this hype around. How would the asset class grow 5 years from now? In the bull case scenario, and what are the biggest trends? So, for example, we've seen generative art with Fidenzas and things like that. Are there any other interesting trends that you've been watching?
Yes. So the bull case, you asked a few questions there. The bull case is, look, traditional art is a massive asset class, right? There's, lots of rich people in the world that collect trad art as a store of value. And, high-end traditional art has been a good store of value over time. And the bull case for pure crypto art is just that, just like traditional rich people collect and believe in traditional art as a store of value, crypto rich people will collect and continue to believe that crypto art is a good store of value. And so as the crypto asset class grows, crypto art as an asset class will grow. And the crypto art is still a small fraction of the total market value of traditional art. So that's kind of the same story as 5 years ago or 7 years ago, Bitcoin versus digital gold, right? It's like, look at the existing traditional market, look where the digital market is, and as the internet grows, as crypto grows, that the digital market will cut into the traditional market. So that's the base case, right, for crypto art, and it's something I strongly believe. You asked about recent trends. I would say one thing that I've been a little disappointed in NFTs so far is that there hasn't been a ton of kind of new, interesting innovation beyond just, crypto art. Like there's a lot of promise in gaming, for example, is kind of a new category that I still believe in long term, but it hasn't really happened yet. And so our NFT fund, as a result, we were initially going to allocate more to kind of new projects, but just the quality of new projects has not been there. So we've kind of allocated more to, to the crypto, the pure kind of crypto art category so far. Within crypto art, I would say one interesting trend is the pairing of physical artwork and digital artwork. We've actually done some kind of internal research recently. There's a number of artists and collectors within crypto that are now either giving or selling a physical kind of print companion to the digital NFT. Sometimes it's a print, sometimes it's more, a physical that has a digital, component. And a very high percentage of the collectors of NFTs are actually claiming either for free or buying a physical component. And we looked at like Beeple is a good example of this, right? Where Beeple has like 4 or 5 collections. They're editions of, 100 or something like that, where the collector can claim. And over 90% of collectors have actually claimed the physical. And Tyler Hobbs is the creator of Fidenzas, which is one of the most successful kind of generative art collections. And he doesn't give for free, but he, I think, charges something like $500 for a physical. And that a very high percentage of those have been claimed, something like over 70% in that case. So, the digital collectors are actually wanting these physicals, and it's actually helping digital artists kind of permeate the traditional art culture as well. So Beeple, for example, is getting a lot of high-end traditional art collectors are now also, collecting Beeple because they can get the physical and the digital. So I think kind of the pairing of the physical and the digital is something that is going to continue to grow. And I think all crypto artists should be thinking about this. How can they can kind of make an interesting physical paired with the digital. And I think increasingly the traditional physical artists are also going to be thinking about how they can make an interesting, scarce, authentic, digital version of their physical. So that's something, that's kind of continuing. You always want to see trends that are, happening within, bear markets, if you will, and that's something that I expect to continue. And like the marketplaces are not yet even pairing the two, so there's no way to really buy both together, for example, or even sometimes see if the physical has been claimed. So I think we're going to see, the kind of marketplaces add this functionality, and maybe new marketplaces emerge where if you want to collect the physical and the digital together, you can easily do that. So that's one area that I think is interesting.
Interesting. So a lot of the NFT market has grown in the Ethereum network, right? And we're starting to see some NFTs in the Bitcoin network, which is quite interesting. But there has been on Solana some NFTs as well, but the majority has been on Ethereum. So I want to talk a little bit about Ethereum. I think you have a bull case for Ethereum, but I would like to know if you can still man the bear case of Ethereum. If there is, let's say 5 years down the road, Ethereum, the price, let's say, of Ethereum doesn't materialize. What would be the causes of it? And the opposite, what would be the bull case of Ethereum?
Right. Okay. So the steel man for Ethereum, I guess there's a couple things. One is very simple. The fees are too high, and for regular users that want to use the network for transactions or for dApps, they'll gravitate towards other either L1s or L2s, where the fees are lower and that are more scalable. So that is, the narrative that, other L1s are, are pitching, and, some L2s are pitching as well. And yeah, so that's, fees are too high for the regular user. So if crypto is going to reach 1 billion people, there needs to be a more scalable, lower fee chain. That's one. I guess another steel man could be fundamentals don't matter in crypto, right? If you look at the reality, I guess one thing that has surprised me most over the past 5 years is I would think fundamentals, meaning, like fees, revenue, what users are actually paying for products, would matter. That's what I would have thought. When I started the fund in 2017, we've always been primarily focused on fundamentals. We also recognize that kind of memes matter. And so we're not kind of blindly investing in just what, fundamentals. But, on a relative basis, fundamentals versus kind of memes, I would say, in 2017, it would be kind of 90% memes, 10% fundamentals. And in 2023, now it's probably, I don't know, 85% memes, 15% fundamentals. Fundamentals still don't matter much. And in terms of again, fundamentals in the traditional sense of, does revenue generated reflect in the market capitalization of a company? So in crypto, is, does the fees generated by a protocol reflect in the market capitalization of the protocol? And the answer, in most cases still is no. And so maybe that'll continue. And like Ethereum, even though it's the generating the most fees, that won't be reflected in the market capitalization, and the coins with just the better memes will continue to dominate in terms of price and market capitalization. That's how I would maybe steelman Ethereum.
Interesting. And what about the bull case of Ethereum 10 years down the road or 5 years down the road? How big the asset class can be, and what about usage?
I mean, the bull case is Ethereum is the most widely used blockchain with all the innovation that's pushing the space forward at the bleeding edge, and that will continue, and has a better store value, narrative than Bitcoin. And, that will result in Ethereum flipping Bitcoin in the long term. That's very simply the bull case for Ethereum. I mean, the narrative is not as easy to understand as Bitcoin, right? In Bitcoin, there's 21 million Bitcoin that will ever exist. That will happen in the year 2140, and the rate at which Bitcoin is minted decreases by half every 4 years, right? That is a very simple narrative, and Ethereum doesn't have that, right? The kind of the money supply has actually been adjusted post kind of merge, and there's not a fixed amount that will ever exist, right? But what is true about Ethereum is the fees that are paid by users to use the network, they actually decrease the the money supply. And while new Bitcoin is still being printed in the Bitcoin network and will continue to be, in Ethereum for the past year, actually the the money supply has decreased. So Ethereum is actually less inflationary than Bitcoin. And as new use cases are created, and new and existing use cases continue to grow, that the fees paid will continue to decrease the the money supply, and people will continue to recognize that while it's a more complicated story, Ethereum actually has a store value is quite interesting and useful. So that's kind of how I think about the Ethereum bull case.
Awesome. So I want to dive a little bit more into the deflationary aspect of Ethereum. So I think the meme was created about Ethereum being ultrasound money. And I think you mentioning the burn process of
Yeah.
Ethereum. But one might say, look, if crypto and Bitcoin and all these assets become very big, there might be forces, outside forces, pushing these assets, and 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 some part of the elite believes that inflation is good for people, and the question then arises, like, does the deflation aspect sets a precedent for Ethereum to change the protocol in the future into inflationary instead of deflationary? And is that can that be detrimental to Ethereum versus Bitcoin?
Yes. Yes. I mean, that's a good argument for Bitcoin, right? Bitcoin is the most decentralized cryptocurrency, and there's the strongest belief for sure that the protocol will never change. And it's actually hardest to change in practice because Satoshi disappeared, and there's no benevolent dictator, if you will, for the developers and the miners and the users to rally around. And in Ethereum, obviously, there's Vitalik, who is the benevolent dictator that there's trust from the community in. And it is possible that if Vitalik wanted to change the money supply again, that the community would rally around that. Now, it's not nearly as simple, of course, as Vitalik just making the decision and it happening. And in practice, I mean, the changing the protocol in Bitcoin is actually, it's kind of the same as changing the protocol in Ethereum. The difference, again, is the fact that in Bitcoin there's no benevolent dictator and there's no one in that community that could really likely get the consensus from users, developers, and miners. So I do think that there is more trust still in kind of one person in Ethereum, although I also think that Bitcoin maxis and stuff kind of oversell that. But I love both Bitcoin and Ethereum, and I always tell people maybe that are new to crypto, I think a prudent portfolio allocation is something like 50-50 Bitcoin ETH. And if you want to be kind of more risk seeking, maybe alter that in the favor of Bitcoin to something like 60-40 or more. If you're more risk seeking, you alter it in the side of Ethereum. And if you're less risk seeking, then you might want to alter that on the side of Bitcoin. So
Got
that's
it.
kind of how I think about it. I am very kind of pragmatic, and I'm not a maximalist. I mean, Bitcoin was my first love, and we own a lot of Bitcoin, but Ethereum, if you look at the past 5 years, again, all the innovation that's kind of pushing the space forward is happening on Ethereum. And I think Ethereum also has an interesting monetary policy that will likely lead to a good store of value. So I think having exposure to both is the most prudent. And you should friends that are outside of crypto or maybe new to it, the next question is always, well, what's like, Bitcoin and Ethereum are already really valuable. What's going to be the next Bitcoin? That's the kind of normies who look at crypto. That's always the next question. And what I usually say is, just you should learn, but you should be skeptical of narratives. And what I really strongly recommend you do is just get Bitcoin and ETH exposure and learn, and don't just jump into some other coin that may have an interesting narrative but is not really that interesting, or has the longevity of Bitcoin and Ethereum. it's not to say that you shouldn't learn and educate yourself and maybe make some other bets, because you absolutely should, but you shouldn't rush into it. And I think far too many people that are kind of new to the space just jump into, some meme coin or something and, allocate 100% of their portfolio to the meme coins. And then, that happens when the meme coin is at the height of its attention, and then it goes away, they lose 80%, and then they have a bad taste in their mouth from crypto, right? That's the experience for a lot of newcomers to crypto. And I think there needs to be more awareness about, no, Bitcoin and Ethereum are really the kind of unique, authentic projects that are pushing the space forward in the biggest way. And the nature is, everything's open source, everything can be easily copied, but we need to be more skeptical, I think, of new projects. Open-minded, but skeptical, right?
Are meme coins Dogecoin or US Treasuries?
Well, I think both, but yeah, I mean, there's thousands of meme coins, right? I mean, even I don't know if you saw this week the GFY meme coin after Elon's interview with Sorkin. The crypto community just copied another meme coin, called it GFY, and that gained some traction, right? So it's really easy for, again, because everything's open source, easily copied, memes spread like wildfire. It's really easy for these meme coins to pop up. And I think they're not good or bad. They just are. It's the nature of crypto, the internet, and the world right now. But I think they've probably led to a lot of normal people getting hurt, and we need to be more thoughtful about participation in a lot of these meme coins, is what I'd say.
Awesome. So let's shift focus to Bitcoin. You mentioned Bitcoin is less risky than Ethereum, but again, I would love you to still man the bear case for Bitcoin. So I've heard cases, for example, about discussions around the security budget of Bitcoin. So what would be the bear case of Bitcoin, 5-10 years down the road?
The bear case for Bitcoin is that usage and innovation is what matters. And well, Bitcoin is the authentic, it's the authentic cryptocurrency, and it's the most decentralized, and it's, the best store of value. It has the best meme. All that stuff doesn't matter. And what matters is kind of real world usage. And when it comes to, real world usage of cryptocurrencies, Bitcoin lacks that. It has the store of value, the digital gold, but it doesn't have anything else, and that matters for kind of the long term. So to me, that's the bear case, is like the usage is what matters, innovation is what matters, and Bitcoin really hasn't had much of that for the past 5 to 7 years.
Got it. And what about the bull case? So in my view, Bitcoin is so early. We're so early into the journey, even though it's $500 billion asset. Like, how big can this asset class become?
Well, it could become trillions, right? And I think it will become trillions. So, I mean, looking at the total market cap of gold, and looking at the total market cap of Bitcoin is still a small fraction of the total market cap of gold, right? And Bitcoin has all these characteristics that are actually better than gold. It's more portable, it's more easily divisible, it's internet native. So if you look at the total market cap of gold, I haven't looked at it recently, but I think it's around 7-8 trillion. And you look at the total market cap of cryptocurrency as a whole right now, which I think is around 1.5 trillion. There's still a lot of upside. And I think in our lifetime, the total market cap of Bitcoin could be, higher than that of the total market cap of gold. That's not out of, the realm of possibility. So that to me is the bull case for Bitcoin.
Nice. By the way, is that a dollar bill behind you, or what does that represent?
Yeah, that's Crypto Graffiti is a great crypto artist, kind of one of the OG crypto artist in the space. He's so kind of OG that he doesn't do NFTs. He doesn't make Ethereum art. He just loves Bitcoin. So your listeners should check out his website. I think it's just Crypto Graffiti Info, maybe. And yeah, this is the United Nodes of Bitcoin. So he kind of repurposed a dollar to represent a hooded president who's kind of looks kind of like Satoshi. So that's Crypto Graffiti.
Cool. That's cool. I will check it out. I didn't know about crypto graffitis. So let's switch up the conversation a little bit to L2s. So it seems that there is a trend into using the OP stack. I've seen a few L2s moving to the OP stack, but I would like to know if you've seen like any interesting trends here and in L2s and what stacks, networks are using.
I don't have a strong view on L2s, to be honest. That's something I would say we are kind of L1 and application focused as a fund. We haven't really invested in L2s. There have been a lot of these projects that have raised a lot of venture capital money, and none of them have really stood out to me as being super exciting or interesting, to be honest. It's kind of, there's a lot of projects in crypto, I would say, that benefit from there being a ton of venture capital in the space. And so they, people that look good on paper are, able to raise a bunch of money from, VCs who need to put this money to work. And, it's a kind of exciting narrative that maybe doesn't make a whole lot of sense in practice. So that's not to say I don't think L2s are important, but they just haven't really fit our investment framework. I mean, we've invested in a lot of applications that are building on L2s, and I kind of think that there might be more value accrual there than actually at the L2 token layer. So yeah, I'm glad to see different innovation in L2s. I would say in terms of our portfolio, the most interesting stuff might be happening on Polygon. That's not to say that Polygon is, technically superior as an L2 or whatever, but there's just some interesting applications that we've seen there. But we're as a fund, we're interested in really unique 0 to 1 type projects that are pushing the space forward in really new and interesting ways. And yeah, so L2s is more, I would say, kind of like this narrative that a lot of people that are maybe Ethereum maxis kind of buy into or something like that. But yeah, we're not super bullish on like long-term value accrual of L2s, but as kind of a innovation platform for apps, that's really kind of what we're thinking a lot about. And we're obviously looking at a lot of projects that are building on L2s.
Interesting. So for L2s, I've seen graphs, I think L2bit or something like that, that usage has grown over time, right? Wouldn't I think the argument that you're saying is that usage doesn't not necessarily translate to token value. Is that right? Wouldn't that apply to Ethereum as well? Or is the argument a little bit different there?
Well, no, usage is growing from a low number and probably will continue to. And I'm not saying that there will be no L2 that has a valuable token, because there probably will. I'm just saying that we haven't really invested in this space because we haven't felt like the risk reward, at the valuations that these projects are investing in are raising at, kind of justifies the potential upside. There's not that much differentiation amongst L2s. There's different technical approaches, but nothing that really stands out to me from kind of a social perspective. And so, yeah, I think if one L2 really starts dominating usage, it'll probably lead to a valuable token, and that's possible. But um, I think token value kind of is a combination of things, right? It's usage. I think usage is a factor. It's this decentralization. It's the origin story of how the token was distributed, and at the end of the day, it's kind of belief. And we just haven't seen a combination of those things that really make sense at the L2 level. But look, we've talked about it internally. It's like that's maybe a blind spot for us, and maybe we should have done more in L2s. I'm not sure, and we're paying close attention to it, and it could change. But yeah, L2s is growing in usage for sure, and Arbitrum right now, for example, it looks like in terms of TVL, Arbitrum has about 54% market share. And again, you could argue, is TVL really, a good metric to look at as fundamental? I don't know. But I think, one area that we're maybe more excited about is kind of the Cosmos SDK model of, app chains. That was the kind of unique, um, kind of social innovation. It wasn't just about the technical, but it's this idea that each application would have its own chain that could all be interconnected. And there's a whole bunch of reasons why that maybe makes sense rather than being an application that lives on this kind of new L2, which lives on top of Ethereum. So that's real what we've leaned into more so than kind of the L2, vision.
Interesting. And Cosmos has Cosmos gather like application usage and is it growing with that approach? I haven't heard too much about Cosmos usage, so I'm ignorant there. I'm curious.
Yeah, I mean, Cosmos, in terms of the usage, it's certainly growing. It's more, I think, developers that are finding it interesting relative to building on an L2. Even, I mean, the most recent example of this is DYDX, which was one of the most widely used applications on an L2. Right, it was initially using Starknet, and they decided to build their own app chain using the Cosmos SDK, and that makes more sense maybe from a regulatory perspective because you truly have this decentralized chain now that is maintained by the validators. You have maybe a better story for token value because again, it's its own native chain that has validators, that has staking, and so yeah, I think and DYDX just launched as a Cosmos chain a week or two ago, right? So this is kind of super new, but I think we're already hearing from a lot of other applications that are curious about taking this approach of creating your own kind of native chain with your own validator set and your own staking mechanisms and running the application kind of on that chain. So in terms of total usage, in terms of like DeFi, swap activity, TVL, I think the L2 there's still more happening on L2s, but I think we're seeing kind of at the developer level a lot of interest in in this kind of app chain native approach. And there may be a way to do a sovereign chain approach on kind of L2 infrastructure as well, and we may see some of that. But I do feel like that is a possible direction that the space could go, is more kind of application specific chains that, especially as kind of chains become more interoperable through kind of IBC technology improving and things like that.
Interesting. Another area that talking about L2s is the Lightning Network on top of Bitcoin. It seems to be growing quite well. I think David Marcus, former head of Facebook Messenger, I think he was CEO of PayPal, started a company in that area. Do you see any new opportunities opening up because of the Lightning Network? Yeah.
No.
Why not?
Um,
Yeah.
I mean, I just haven't seen any. Lightning has been kind of a story that, Bitcoin people that have wanted more innovation have been, pitching for a long time, and it hasn't happened yet. So it could happen, but I just feel like in terms of the quality of entrepreneurs and the applications that we're seeing, it hasn't been there in Lightning. So it feels like more of a narrative than actually something that's happening in practice to me. And again, I'm happy to be proven wrong because I love Bitcoin, and this is not a shot against Bitcoin, but I believe in Bitcoin as digital gold, as the most decentralized cryptocurrency that has the best chance of delivering on the promise of something like digital gold. And I don't see much innovation there, and I haven't for the past, again, 5 to 7 years. So
Awesome. So let's switch to a controversial topic, Solana.
mhm.
So Solana, from what I understand, they have some innovation in terms of how they sync the nodes. They use, I think, these verifiable delay functions. But I think you've mentioned before that there's a lot of VC money there, and it's not as original a story as Ethereum, for example, or Bitcoin. But the same case could be made about Ethereum versus Bitcoin, right? Could you? I know you're like pro Ethereum, not necessarily in favor of Solana, but could you still man the case of like the bull case of Solana, 5 years down the road?
Yeah, I mean, I have nothing against Solana. I think clearly Solana has built a product that people like as an investment. So there's something to be said there, and some developers like as well. I guess the bull case for Solana is that this scalable chain will continue to attract new developers and build unique applications that are pushing the space forward. But I guess what hasn't been there yet is any unique applications that are pushing the space forward, right? And so I guess I think the hype, the shilling relative to what's actually happening on chain that's pushing the space forward has not been there yet for Solana. And again, the bull case is, well, it hasn't been that long yet. Solana kind of came on the scene. I think the genesis may have been in 2019, so many years after Ethereum, and it's still early, and there's great developers that are building, and there's going to be kind of this breakout use case that pushes the space forward. And if that happens, that will kind of catalyze, I think, more developers looking at it, and more users, and more potentially new applications. So if Solana can become the bleeding edge chain where like new stuff is happening that's pushing the space forward, that would be very exciting for crypto in general. And that would be great for Solana. So that hasn't happened yet, right? Everything that's kind of working on Solana is stuff that was pretty much kind of cut and paste from Ethereum, right? DeFi was a big category that pushed the space forward. That happened in Ethereum. NFTs was a big category that happened on Ethereum, and that that stuff is what happened on Solana. And I think a big part of Solana became kind of this Silicon Valley chain because it gave a good chunk of the tokens early to investors who then had skin in the game to to market it. So that is kind of just, I think, the reality of why Solana became so hyped. And again, I think there's good developers building on Solana, and it's possible that we see stuff that's pushing the space forward that comes out of there, but it just hasn't happened yet.
Yeah, interesting. Yeah, I've seen like I think an application on DeFi of basically using order books? Because I think, for example, Uniswap doesn't use order books, right?
Yeah, it's an automated market maker. So that was kind of
Yeah.
one of the innovations in DeFi. Really, was this idea that token holders could, in a passive way, become the market makers by just staking their tokens and earning fees. And there were actually order book decentralized exchanges before Uniswap came along that didn't really gain much traction in Ethereum. And I think this idea that like any token holder could kind of stake their tokens in an AMM and generate fees was a big part of why Uniswap really took off.
Interesting. So let's switch a little bit to stablecoins. It has been a very dense conversation, but it has been awesome to learn a lot more about some of the crypto market and space. So thank you so much.
Of course.
So stablecoins, I've seen more and more usage, and for example, you can see in numbers like how stablecoins have grown. Like, what's the growth case for stablecoins, and why they can become important, or can they become very important in the future?
Well, I mean, one of the initial use cases for cryptocurrency generally has always been kind of medium of exchange, right? And even like when I was at Coinbase in 2013, we were pitching Bitcoin as a cheaper, faster way to do digital commerce, right? And it never really happened in a big way for cryptocurrencies themselves, like like Bitcoin or Ethereum. I mean, Ethereum is actually, it's happened more, I would argue, because of NFTs and kind of digital native, commerce. But cryptocurrencies mostly have been an investment, right, for people. And the promise of a stable coin is a cryptocurrency that can be useful as a medium of exchange rather than kind of a store of value or you know currency that you use to buy and sell things. So that's something that stablecoins are just fundamentally a product that I think people want, both as a on-chain kind of asset that you can trade in and out of cryptocurrencies and NFTs for, but longer term, I think as a better medium of exchange for commerce on the internet. So that's and stablecoins are continuing to grow because people want an on-chain medium of exchange to do whatever in it, and so that's I think the case for stablecoins. And then when you get into stablecoins, there's decentralized stablecoins like DAI that are backed by kind of on-chain digital assets that are in a smart contract. And then there's centralized stablecoins like USDC, which are backed by kind of off-chain dollars that are stored in a bank account. And there's kind of a variety of approaches that have kind of pros and cons in stablecoins. But yeah, the usage of stablecoins is growing. I don't think it's anywhere near where it will be, and I think there's a continued need as well for products that are making stablecoins kind of easier to use and interact with.
Interesting. What are some of the most interesting trends in crypto that you've seen in numbers, like most recently? So it could be stablecoins, could be NFTs or anything.
I mean, I've talked about this a bunch, but prediction markets are something that I think will inevitably be a major category in crypto that pushes the space forward. A prediction market, for people that don't know, is basically a speculation market for any outcome. So you could have, will the Red Sox beat the Yankees? That's a prediction market that a lot of people are familiar with sports betting. I guess the difference is it's not a binary bet. There's a 0 to 1 market that you could kind of trade around. And then you could have a market on, will Trump or Biden, become president in 2024, and kind of everything in between. So I think prediction markets will ultimately become a better source of truth than the corporate media. And I think most people kind of in the world still get their information from corporate media from the New York Times or from Fox or CNBC or whatever. And those are biased sources, and they try to be unbiased in different ways, but at the end of the day, it's one person, or a group of people with a view. And the great thing about a market is it incorporates a number of views. Anyone that has a view and that has stake can put their skin in the game. And I think that reveals a better source of truth to the world than a corporate media news headline does. So this is an area that I think is still early, but I'm super excited about as a category that can really push the space forward.
Interesting. Yeah, I've heard you talk about this, and I not necessarily in crypto, because crypto seems like a global phenomenon, but there's a startup called Koshi that is doing a similar thing, but I think in the US. I mean, I can see sports betting, but I just don't understand why hasn't this market emerged before? Like, what's the reason? Why would this market be big if it hasn't emerged before? Why wasn't there a big market of betting in the past? Like, why would it happen right now?
It's always hard to say. I mean, timing is always the hardest thing to predict. And I would say it's not a great argument to say just because it hasn't happened yet means it's not going to happen. And what we do as investors is have a very long-term view of something that we think should exist in the world and just kind of bet on that. And product timing is important. So why? But why is the time right now? I would say one is there's never been a global payment rail at scale that can facilitate these markets. And for these markets to be useful, you need real liquidity, right? So there's European prediction market platforms right now that that exist, but they maybe only offer payments for 25 countries or something. And for a company to offer payments for that many countries, it's really hard to do from a practical perspective. You have to do a bunch of different payment integrations with companies around the world. So I think a on-chain kind of prediction market service that anyone in the world can participate, that's ideally suited for crypto, right? So that would be one reason why the timing, I think, is good. Regulation in the US has also been a big factor. The CFTC, strongly regulates prediction market platforms in the US. And there are lawyers out there that think that the CFTC is really overbearing kind of on this front. And, they allow binary bets for sports, for example. And that's, regulation there is opening up in the US significantly over the past several years, and it's continuing to. But for some reason, the CFTC is really, strict when it comes to a 0-to-1 real market for a presidential outcome, for example. It's something that the CFTC is harshly regulating, and there's lawyers that think that this could go to the courts, and there could be a ruling in the favor of the people and the companies that want to offer and use these services, right? And actually, Kalshi, you mentioned Kalshi in the U.S. They're now suing the CFTC because they want to offer prediction market platform for users in the U.S. So we're involved in a project called Polymarket, which is not for U.S. consumers. So if you live in the U.S., you can't use Polymarket. You can view it, and what I'm seeing is a lot of friends and users are actually now in the U.S. are viewing these markets as just an information tool. And I'm actually doing it myself, and I've been actually benefiting a lot from seeing kind of these different markets around the world and what the odds are for them, and it's making me a more informed just citizen in the world, I would say. But yeah, I think another, to answer your initial question, another reason, in addition to the kind of global payment rails, that could be the right time is regulation, particularly in the U.S., could be opening up. And I guess the third would just be like memes, and kind of the memification of the world, if you will, is just continuing to grow. And prediction markets are really well suited for kind of the memification of the world, because you can, every day or every couple days there's new kind of cultural events that are popping up, and when you can have markets for them, they tend to be fun for people, and people are kind of just spreading these interesting markets for just random cultural events. So that's the third. I guess the fourth, which I referenced earlier, and like NFTs were an interesting business model for creators in a world where the advertising business model is increasingly bad for creators, and maybe for people as well. The prediction markets could actually become a really interesting business model for creators. So right now, an example of this is Polymarket is creating its own markets, and soon they're launching Create Your Own Market, where any creator can create their own market and generate fees from that market. So you can imagine, a big influencer, say Mr. Beast, creating a market for something, either that his community cares about or that the world cares about, and, talking about that market, and then offering his fans to, to contribute, to that market, and generate fees from that. So again, it's really tough to time, these products. And I think there tends to be kind of, maybe a desire to create these clear narratives for like why it works, and sometimes it's just kind of a combination of a number of things. There's not a really clear narrative, but I think there are a number of reasons to be excited about prediction markets, and I think it's still a very kind of underappreciated area of the internet, really, but crypto specifically. Like, ironically, crypto people aren't that into prediction markets right now. And I think one of the reasons is it's like it's not degen enough for crypto people, right? Where if you're speculating on, like, the go fuck yourself meme coin, you can make 100x, if it works. But if you're speculating on, will Trump win in 2024, maybe you can only make like 2x right now. So there's not that kind of upside that crypto degens really want. But I think prediction markets are a fundamentally like more useful, product for the world than like the thousandth meme coin. So, and I think that will kind of adjust in time, and gravitate more people to the prediction markets.
Yeah, I'm actually surprised by the probabilities of the U.S. presidential election in the poly market. For me, the percentage would be 90% and 10%, but for one candidate versus the other. But
Who do you think?
and yeah, I think Trump, like
Yeah.
the polls and everything, but who knows
Yeah.
what's to come this year. But it's interesting that Vitalik also posted, about prediction markets on Farcaster, and the only thing that like, the only thing that goes through my head is it may become something that like intellectuals really like, but I don't know. So like, I don't know if the average user would like, but I see, for example, presidential elections and sports betting being something that people really care about. But, like, there's interest rates and things like that that Wall Street really cares about. So maybe it becomes something really big. Anyway, let's switch topics to privacy. I mean, we're almost out of time. Why hasn't privacy caught on yet? Like, why, there are important, projects there. So, for example, Zcash, and like one of the arguments I think that people use inside is that, for example, Ethereum can build on top of it, but Zcash, it's not. You don't have the same kind of privacy requirements as having it on the network itself, like Zcash. Why hasn't that caught on?
Well, I think, a lot of crypto
it's narratives that are oversold. And it's not that it hasn't caught on. I think the trend is certainly towards, privacy preserving products. And I think that'll continue. I think people fundamentally, value privacy. And especially when there's things that happen that violate people's privacy, it kind of makes them care about privacy more. But maybe on a day to day basis, it's like, people don't care about it as much. And then something happens that makes a lot of people really care about it. And I think that's just going to continue. But I think, there've been a bunch of interesting privacy projects that have, gotten usage. And it's not that people don't care about privacy or it hasn't really worked. I think more just maybe the narrative for like why privacy coins would have a lot of value was oversold. People bought into it and it hasn't delivered kind of on that promise yet, is what I would say. So what I strongly believe, and I talk about this a lot, is like the stronger the narrative, the further from the truth. And I think that's important for anyone to think about, but particularly in crypto is like when you have this narrative that's really aggressively sold, maybe you should be cautious. Like, the thing about NFTs kind of came out of nowhere. There wasn't like a loud narrative about this is why NFTs are interesting. It's actually something that not a lot of people believed. There were a small group of people using it, but it wasn't this really loud narrative. And that ended up really working, right? And then the narrative, of course, got kind of too loud, and that we're in kind of a correction of that. But I feel like privacy in particular, it was this kind of loud narrative that was sold kind of early, and you had a whole bunch of these coins like Monero and Zcash, and I'm blanking on there was one,
Partisan? Is that
huh?
Partisan, I think?
That might be one. I mean, there was a
Yeah.
bunch of them, right? There was one kind of Silicon Valley backed one that raised a bunch of money and that didn't go anywhere. But yeah, I think it's more just like maybe the narrative was sold too much, and the the coins haven't delivered from a value perspective. But I think privacy is people are going to increasingly want privacy, and it's clearly to me the right long term trend.
Yeah, that's interesting. Yeah, the market cap of Zcash is pretty low. The last question that I have is something that you posted on Farcaster, and I loved your screenshot essays that you posted. One of them is around counter signals. So there are some signals that are actually counter signals. So I think you mentioned about mainstream media believing something. Are there any big counter signals that you're seeing either in the crypto market or in the world in general? And can you expand a little bit on what are these counter signals?
Yeah, I mean, a counter signal, I think it's a pretty simple concept that anyone can really understand if they think about it, but a lot of people interpret the world too literally, and maybe get caught up in their kind of literal interpretations of the world rather than being thoughtful about what the truth really is. And so, the classic example is Sam Bankman-Fried and FTX, right? Where he was, signaling that he was, this great person that gave money to charity and drove a, old Toyota and didn't care about money or perception. He was just building this product and cared a lot about crypto. And, he was doing, partnerships with these big celebrities and having this, big crypto conference in the Bahamas and on stage with Bill Clinton and kind of signaling, all of these things that, made people believe that he was, a good person and legitimate, right? A lot of, the signaling is around like legitimacy and wanting, affiliation with people that are perceived to be legitimate, right? And those I think are are all counter signals, and you need to be more skeptical of these people that and companies that are signaling things that indicate that want people to believe a certain thing, and that often indicates that people that care more about perception than the reality of what's being done. And so yeah, I think that's something that I think about a lot is, you- people that are overly optimizing for perception. I think it's often an indication that the truth of who they really are and what they're really doing is not great and often very bad, as the case of Sam Bankman-Fried and FTX shown. So it's always it's always interesting. I mean, that's a good example, and I don't want to kind of over optimize for that example. And maybe there are examples of these people that are really focus our perception that really are kind of good people and doing good things in reality. But I don't know, everything that I've seen kind of indicates otherwise. So we're having a discussion with some family members recently that love Taylor Swift, right? And, their argument, I get Taylor Swift is, puts out good music, right? It kind of, it's very mainstream, and it kind of, it resonates. And, they're like, oh, she's such a hard worker. She's a talented, she's such a talented musician. And, my belief on someone like Taylor Swift is there's a lot of kind of soulless greed for attention and money there. And to me, when you see someone kind of so focused on attention and perception and money, then that's often an indication that they're not being true to themselves, and that the reality is different than what the perception is. So yeah, will Taylor Swift come out to be some, like, massive fraud or something like Sam Bankman-Fried? I don't know, probably not, but something tells me there's counter signals there that indicates that the truth may be very different than what the perception of her currently is. So that's, I don't know. I don't obviously have a strong view on Taylor Swift, but that's like kind of an example of, I think there's there's a lack of kind of authenticity and being true to oneself when you have this huge focus on perception. And I think that's true in, like, my industry and, like, the crypto venture industry. You see some funds, for example, that are very focused on that. I tend to think it's true across really society broadly, but I don't know, we'll see.
Yeah, it's interesting. Just a last comment. Like, yeah, I believe Taylor Swift is very toxic to to our culture.
Yeah.
I think she's very unhappy. Like that's the view like that I have from outside. But I think it's like music, especially. You have a few record labels that have so much money and power, and so they push these artists. And I think it's really, it doesn't match American culture. And I think we're starting to see artists that are going independent and they match American culture, like really match American culture. And
Yep.
and like American pop music's like the worst offender of all of them, like all of music. It's like really like it it's so toxic. It feels to me like culture wise, and it doesn't match what people really want. And once like social media, like we're starting to see this wave of social musicians that are actually really good come out from social media and going direct to consumers. But I think this
Yep.
wave is just starting. So
Yep.
we'll see a lot of this fakeness go away. And I think Hollywood has been seeing that a little bit, but it's just the start. So
Yeah, 100%. Yeah.
I'm another interesting, now that you mentioned that I didn't match this counter signal, is politicians. When politicians are dressed like really, really nicely, and like it doesn't, like you look at them, you're like, there's something that like shows me like there's something uncomfortable
Yep.
in my gut that shows like, why are they and when the politicians are like, when people make fun of a politician because they look funny, I'm like, oh, this is actually good because they are actually portraying how how they are, they are funny, and like that's their true selves,
Right.
not this fake portray of themselves anyway.
Yes. Yeah. No, politics is one that certainly there's a lot of counter signals, and when someone is, signaling that they're virtuous or that they're, doing a good thing, I think the truth is often the opposite. But, a lot of people interpret that so literally, and and that's the great thing about the internet, though. I think the internet, over time kind of reveals truth and reveals authenticity. And that is going to make the world a better place in the long run because, no longer 10 years ago, I think, you could just, hide behind, you know, selective periods or like the corporate media as a politician to defend yourself. But, X, for example, is a great place for people to see, what you're really like. And I just think over time, if you're just doing the kind of the standard tweets that look almost robotic that was generated by, ChatGPT, that is going to become so obvious to people that it's not going to work anymore. And people want authenticity. They want people that are being their true selves and not just kind of conforming to what, most people view as good or something like that.
Awesome. Thank you so much for taking the time. Really, really
Yeah.
appreciate. We went a little bit overboard, but thank you so much and have a awesome day. Thank you, Nick.
Yeah. Yeah, of course, Juliana. Great to meet you. And thanks for the time.
All right.
And yeah, happy to chat anytime.